following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at this quote is by Robert Brodt. Remember that there's part of life for which you are the explanation. How cool is that? Market-wise, let's take a look at it out here. We have the Dow down 36, Nasdaq's off 1, S&Ps are off 1.5, gold contract flat at $1,172 an ounce, silver down 4 cents at $15.81 an ounce, platinum $1,084 an ounce, copper flat at $2.62 a pound, light sweet crude off 57 cents at $59.71 a barrel. Bonds, we had the 10-year down 5 ticks, 125.18, 30 down 10 at 149.17. King dollar off 23 ticks at 95.39. You have the euro down 3 at 112 and the yen off 22 at 123.63. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We'll start with the SPY, folks. SPY right now is trading out here at a price point of 210.32. What we did out here yesterday is this. When we talk the benchmark out here, folks, that I'm using is the February 25th high. That was the first high that was generated. Bottom line, the market has had a tough time hanging over that high. We had out here yesterday, couldn't hold price, had an expansion on the way down, and that expansion was with volume. We're doing 62 million shares today. Yesterday, it did 92 million. And what you did have, and this is where the surprises come, the surprises to the downside yesterday. I expect as we're getting into this close out here today, even with Europe being flat, more than likely you're going to see, once again, that surprise come into the downside. The market just took a nice little bounce here. We just went from 97 to 210.36. I suspect you're going to see that come right back down the other side. If we take a look at the S&P cash, the cash number, folks, continues to be at 2119.59. The longer you stay underneath that, heavier the probability that market wants to go south. What we also had yesterday is this. Now, yesterday, when you do price and volume, folks, and they're in harmony, that brings the probability higher that you're going to go in that direction. So if price and volume are going up, and when I talk harmony, I'm talking about the small caps, the Dow Industrials, the NASDAQ, the Russell 2000, okay? What we had yesterday, I've seen, not many times, but I've seen, it's really hard to do, and this is what it is. If we put up the composite, what you're going to see is this. The NASDAQ composite actually went to a higher high, and the composite had lighter volume. So when you try to get to a higher high, you get lighter volume and you give it up. That's a bearish indication. That being said, all the other indices went lower with volume expanding. It's like, whoa, man. And that was an indication, folks, number one, that you have sellers in this market. Number two, that phenomena, though, when it happens, you got to pay attention to it because that is a hard setup in order to do, period. The NDX 100, we take a look at the Qs out here today. This is what we have with the Qs. You know, and thus far, by the way, folks, okay, we have light volume. We'll see what the market gets thrown at it in this last hour. There's no doubt you have nervousness over the aspect of what's going to happen in Greece. That's what this whole thing is. The thing that's intriguing, it's like, man, they're just going to kick it down the road. But guess what? You know, the market is sitting there saying, hey, what are we going to do about this thing? The Qs out here today, the Qs are flat at 15 million shares. If we go to the IWM, we take a look at the IWM, the Russell 2000. What would you have with the Russell 2000? Right now, we're trading out at a price point of 127.86. The Russell also had an expansion of volume on the way down yesterday. Right now, the Russell has to get under 127.13 in order to run down to the lower end of that range. Gold contract. What do we have with gold? Gold's trading out here at a price point right now of 11.72. What we have with gold, she is trading into the March 18th sign of strength. The top of that is 11.75.10. The last swing point on gold was 11.62.10. That was established on June 5th. You know, we'll see whether it's going to test that or not. You have really light volume on the way down here, but we do need a sign of strength inside that market. Bonds. What do we have with the bond market? Now, the bond market's getting intriguing, folks, and this is what it is. Bonds are in a confirmed ABC structure on the way down. And what a confirmed ABC structure is on the way down is this, is that you do the A to B leg. You do a B to C leg. The A to B leg is a straight line move. B to C leg, you go all over the place. The C to D leg is also a straight line move. And you have to break the B point with volume in order to have a confirmed ABC structure on the way down. That's what we did in the 10. That's what we did in the 30. That's what we did in the TLTs. We went down dramatically. I mean, we went on the 10-year, you went from 129.21, down to this 124.14. That being said, what happened last week is that you had two separate signs of strength price-wise, but not volume. Well, the volume did come in. It did. It came in on the 18th. Now we're backing up, and you're backing up with light volume. So you really want to wrap your head around these bonds, because if these bonds want to make another run, the correlation would kind of, my take is that this is how the correlation is. If the bonds are making a run, topside, I mean, the yields go back down again, that's saying to me that, yeah, the market wants to rally. So that's why I'm watching it so closely. As markets sell off, money's going to pour into bonds once again. And that correlation, oh, yeah, that's the correlation. That's cool. Yeah, see, that's the correlation. Okay, so, man, see, the bonds and the dollar, it looks like they're changing trends here. And this bond, even though it's sold off, the market didn't, you sell off, rates go higher. It looks to me like right now bonds want to go up again. That's going to be intriguing, but it's not intriguing if, in fact, the market's going to have a fast sell-off. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 42. You get the Nasdaq off 4.5. S&Ps are off 3. Let's go to Mike in Dallas. Hey, Mike, what's going on?
Hey, Tom. Listen, real quick. You were talking about the bonds, and I was just wanting to know what your thoughts were on the relationship between bonds and the treasuries.
So the bonds that I was actually speaking of were the treasuries.
I'm at the notes. I'm sorry.
I wouldn't be shorting them right now. They look to me like they're going to go back up, man. That's
okay.
Yeah. They're trading like they want to go back up. And right on the commercial break there, what I just did is I pulled up the TLT, and the TLT is doing the same thing. The TLT, when we're trading at 116.89. The high out there was 137.
Right.
It looks to me like they want to bounce, man. And that could be a substantial bounce. If this market. My take is that the surprises no doubt will be on the downside. Well, that's my take anyway.
Okay.
And that'll bring people right back in. And what you had, they sold a lot of bonds out here today, and the demand was huge, man. I mean,
wow.
There was basically there was a lot more demand than there was debt for sale. So.
Okay.
Yeah.
Okay. Well, thank you very much, Tom.
Okay, man. Have a great one. Have a safe one.
Too.
If we go over to the IBB. Now, the IBB, folks, hasn't fall apart yet. This is, of course, the biotech index, the NASDAQ biotech index. What it has done is this. You pull back slightly. We're at 375.71 right now. First off, it has to get back inside 374.97 in order to get into a lower price. And what it hasn't done also is this: it hasn't come off the high with volume. If this thing wants to go south, you'd see that baby come off the high with volume. That being said, what is interesting out here, and this is at the right time, well, for bulls and bears, basically. I'd say for bears more so, just because of the run that the biotechs have had. There is a couple new leverage ETFs from Direction out there, and they have a 300% biotech bear, which is LAB. LAB D, I think. Yeah, 1 second. Let me see this. Yeah, LABD. 1 second. LABD. LABD is the bear. That's trading at $32.52. So that is 3 times the bear position. And if you're a bull, they have LABU. That would be the bull position. They just brought those out a few weeks ago. And what they also did, now this, so you have LABU and LABD if you want to check those out. This is going to be a trip. They also have the China A shares. They have a 1 times and a 2 times. CHAU is the 2 times inverse correlation. I suspect that is going to be getting a lot of action because, you know, that CHAU and CHAD. Let me pull this up. Yeah, CHAD is the 1-time bear. Because if we look over into China, what we had, the volatility over there, folks, is amazing. You're talking about 3, 4, 3.5%, 4% up and down, like just really quick. Last night we were down 3.5%, and I wouldn't be basically hitting that baby too. If we take a look at it, it was down 162 points. You're trading out at 45.27. It's not a shot yet either, by the way. What you want to see this thing do before you basically, the cool thing is that you have a way that you can go in and out very quickly on a daily basis with that the direction 200%. So the A shares are the 200%. I would let Shanghai get all the way up to like 49.86. Right now we're only at 45.27. It has quite a way to go. If we go over and we take a look at the indices in general as to what's moving the market out here, what we have is that if we take a look at the Dow Industrials, inside the Dow, you have United Healthcare, that's up 333. Disney is up 90 cents. You get Intel up 20. Verizon is up 26. Taken away from it on the way down, Caterpillar is down at $1.32. You get 3M off 138. Chevron's down 87. And Travelers is off 82. The inside the NDX 100, what you have, strength versus the weakness. The strength is Monster.com. Monster Beverage. That's up 388. Tesla is up 471. You get Cognizant Technology up 68, and Comcast is up 63 cents. Taken away from it on the way down. Green Mountain is off 255. Seagate Technology 155. Netflix is down $17, and Western Digital is off 198. If we go over and we take a look at Hertz, HTZ, what you're going to see with Hertz, folks, that good old HTZ, that October 04 level, 14 level, guess what? Hertz is going right for it. What Hertz, will put this up on a weekly basis. And more equities, folks, just every day, every other day, another one makes this lunge down at this. So on Hertz, the high volume swing low, $18.50. Hertz had gone from $18.50, got all the way up to $25. Bottom line, you're breaking lower today. You're going after it. It hasn't hit the bottom yet. We've hit $18.89, and it's $18.50. I suspect what you're going to see there is that you're probably going to build cause to basically blow that away. That's how this seems to be setting up. Some of the Dow stocks, we look at some of the Dow stocks. You have Big Blue down 60 cents. We have American Express off 63. Oxy's down 91. We go take a look at the XLE. Oh, I know. We want to look at oil. XLE is still in trouble. This is just XLE. It looks to me like bottom line is that things are going to get a little bit cheaper. The XLE is going to go after another B point. That B point is the 70. In fact, it's going after it right now. This is going to be interesting. It's lighter volume, but it's going after the 75.87, and we're at 90 right now. That's where we are. It'll probably close there and just open up tomorrow and jump it. That's the way it seems to be looking right now. The oil contract itself, oil is making a small U-turn. And it looks like it's at the top of the range, and we'll see how CLQ. So oil right now, trading at a price point. Let's put this on a daily. We're at 59.68, and the bottom of this range is approximately 57.74. That's where we've been trading. We've been trading at those levels for about 2.5 months. I expect that we're going to probably work our way down into that level. This is Tom O'Brien. This is TFNN. Dow Industrials right now are down 41. You get the NASDAQ off 5. S&Ps are down 3. You stay right there, folks. We have our man, Mr. Chris Gaffney, coming up next. He is the president of Everbank World Markets. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is trading down 42. You get the NASDAQ off 4. S&Ps are off 3.5. And right now we have our man, Mr. Chris Gaffney. Chris is the president, folks, of Everbank World Markets. As you come over to our website at TFNN, you're going to see the Everbank banner on the right-hand side. You can hit that banner, and it's going to bring you over to the 5-year Market Safe Power Metal CD. I want to welcome Chris Gaffney back to TFNN. Chris, how you doing?
Doing great. Thanks, Tom.
It's great having you on when the market's open. You know, normally I have you after the market wrap. You know, and it's intriguing, of course. You know, everyone's worried about Greece. It seems that yesterday the surprises come to the downside, and it's great to have a diversified portfolio. That's the reality. So talk to us and explain to us how this Power Metal CD works?
You bet. It's a FDIC insured CD that's based on the value of 3 different metals. It's the return is going to be based on the performance of gold, silver, and copper over the 5-year period. And basically, you purchase a CD, $1,500 is the minimum. You put that into the CD, and at the end of 5 years, we're going to average the 5 years annual returns of each of those 3 metals, and going to pay you the upside, your principal plus the upside of those 3 metals over the 5-year period. It is maxed out at 45%. So the maximum return on the CD is 45% over the 5-year period.
Yes. Now, when they price out the CDs, and folks, okay, the deadline, the funding deadline for this is on July 9th. So you have plenty of time. So you open the CD, and then are the yearly dates that they average it out? Chris, is that how that works?
Right. There's 5 annual pricing dates. So on each annual pricing date, we're going to take the price of the metal, each of those metals, and compare it to the original price of those metals, and whatever that percentage return is what we're going to lock in for that annual pricing date. So
right.
At the end of 5 years, you'll have 5 of those annual pricings. And then we're going to average those 5 pricings, and that's what the CD is going to pay out.
You know, and I remember the last time, you know, and this is quite a while ago, the last time you had done, I believe it was one of the gold ones, the bottom line is that, you know, gold went to the moon and then came all the way back, but yet that CD, because of the way that it was pricing out, that CD paid out nice.
Right. That was our diversified metals CD that was just matured last month, and as you suggest, you know, because of the averaging, investors that even though gold and the metals were priced below where they originally entered them,
yes,
because they had risen for a time and then came back down, the averaging paid out a nice return. And the key again on this CD is that it's principal protected. So it's a way for investors to take advantage of what can be a volatile market in the metals market, but still keep their principal protected. And that's so important nowadays, as you know, and with these markets the way they are. You know, return of principal is really as, if not more important than return on principal.
Yeah, listen, there's no doubt about that. It's huge. You know what we've never gone over? How did you guys get so creative that, like, no, seriously, do you know what I mean? That you start putting these together. How did that come about?
Well, that was about back in the late 1980s. We worked at a little bank in St. Louis, and Frank Trotter, who is my boss here at EverBank, came up with some products for foreign currencies, and then we expanded that, and really what has driven us is diversification, and we want to offer an investor the tools to diversify their portfolio out of just the normal stocks and bonds. And so that drove us to create products that allow clients to do just that, and to invest into the currency markets, and to give them access into metals markets and other markets that, you know, typically had been set aside for institutional. You know, institutional investors have had these structured products offered up to them all the time, but on the retail side, they were typically not available to the retail clients.
And you know what's cool? And, you know, I get a lot of calls, Chris, you know, about bonds, right? You know, and I just trying to explain to them, listen, I don't like bond funds. I like, you know, treasuries if you want a lot of treasuries. But I'm realizing what's really cool about this product is that, you know, you get customers come in. Let's say I'm a new customer, and knowing that you come out with these products, you know, every couple months, you could start laddering these products and have a really sweet diversified portfolio, but you know that you get all your capital back.
Absolutely, and we have our best clients are our existing clients for these new market safes, and they're constantly coming to us and asking us, when are you going to have that? That's really what generated this one. Is we had those maturing diversified metals market safe CDs. That those clients are saying, hey, when can you do another metals? We want another one that's based on metals. So we listen to our clients, and we've had them based on, you know, anything from the treasury market to Japanese real estate market to, you know, currency returns. So we've certainly varied our offerings and continue to look for a need in the marketplace and try to fill that.
In the last, particularly the last 20 years, it's pretty cool how retail investors actually can be on a somewhat level playing field with a large institutional investor, with the cost structure much less expensive because they don't have the regulatory deal to deal with.
Right, and we $1,500 minimum to get invested into these CDs. So it is available for somebody, and again, it should be a portion of their portfolio. We're not asking,
Sure.
Nobody should put 100%, but this is a good way for them to get a portion of their portfolio invested into what again can be a volatile market. But a market that they need to have an investment in. It's key to be diversified into both metals and currencies. In this case, it's metals, and I think it's very important to have some exposure into the metals market.
Absolutely. And folks, the way you do it, come over to our website at TFNN. You're going to see the EverBank banner. You can hit the banner. Now, when you hit the banner, you're going to go over, and what you're going to hit investing. And as soon as you hit investing, you're going to see market safe CDs. That will pull it up. You'll see the term sheet right there. You can give them a call. And the bottom line is that that number is 855-750-4051. The deadline, folks, is July 9th. And, folks, this is also IRA eligible. So you have a lot of different ways that you can invest in order to stay and get diversified. Chris, thank you so much. You have a great one, a safe one. Of course, we look forward to speaking to you again.
You bet. Thank you for having me on.
Thanks. Really appreciate you calling in.
All right.
Take care. Bye-bye. Market-wise out here, folks, just as we were talking with Chris, bottom line is that as we come into this close, I suspect you're going to see that this baby was trying to get sold down once again. We have the Dow right now at 53, the Nasdaq's off 30, S&Ps are off 4.5. Volume is still light out here. We'll see if, in fact, the volume does come in. Yesterday, I was working up in Boston, and the bottom line is that it was pretty wild watching that whole deal coming into the close, okay? And that, by the way, folks, okay, when surprises are to the downside, that is a market that wants to go lower, particularly, and it's not that it came out of nowhere, but it seems that it comes out of nowhere, and that is just push, push, push on the way down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow right now is down 56. Nasdaq's off 8. S&Ps are off 4.5. Gold is flat. Silver is flat. We'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow is down 56, Nasdaq's up 7.5, S&Ps are down 4.5. Let's go to Marie in Pennsylvania. Hi, Marie. How are you?
Hi, I'm fine.
You having a good summer?
Oh, so far it's been wonderful, but it's been up and down.
Weather-wise? Yeah?
Yeah. One day nice, the next day not so nice.
Really? Yeah. I was working in Boston yesterday, and it was gorgeous. And the day before, I guess they didn't get a tornado in Boston. It was in Rentham, but that's really unusual. So they had some pretty heavy weather. But yesterday, oh, my God, it was Chamber of Commerce Day, no doubt.
Oh, that sounds wonderful.
It was. So you like to look at British Petroleum?
Yeah, what I do is I look at Exxon and Chevron and British Petroleum, and it seems to be out of step with the other two, and I was curious.
It is, and it's a much better looking stock, and it pays 5.7%.
Right.
And I think what it is, you know, when you bring this up, so you bring it up, folks. The low for the year is $34, the high is 53. And when you bring this back, I'll show you something here, because during the commercial break, I saw what you were looking at, and I did the same thing, by the way. I brought up Chevron and ExxonMobil too, because I looked at this as well. What is going on here with this? And it looks that, when this stock got killed, and 2010, of the big oil spill, that is, that was a whole new almost investor base, and that investor base is like at about $39. So that's a nice setup. Well, let's put it this way. It's a setup that I don't think it's going to break down,
Okay. That's what I was wondering.
Right. You're at 41. I mean, the buy is really at like 39, but it's like if you're going for the dividend, that'd be fine right here, really. Do you know what I mean?
Yeah.
Because Exxon, Exxon is breaking down. It's a different animal. I mean, Exxon is breaking down. They only pay a 3.4% dividend.
Chevron looks like it is too, isn't it?
It is. It's Chevron, CVX. Oh, look at this. Yeah, okay, so here. Yeah, you know what I'd do? I think I'd have a little more patience with this, just because it's like, okay, Chevron has broken, this 98.88 today. Mm-hmm. And it's like, okay, if you're breaking that's a high volume swing low, folks, okay? And when you break a high volume swing low and you can't hold that price, and it's straight down from like 135, it's like, what's going on? So I think I'd hold on, whether it's a week or 2 weeks, you know what I'm saying? Just to see, is this going to be really a breakdown in oil?
Okay, so it doesn't necessarily mean this is curtains for Chevron.
To me, it would be that, yeah, Chevron is going down, but it should have rejected that low today, okay?
Yeah. Mm-hmm.
And ExxonMobil's going down. And my point is that those two, those are monster oil stocks, right?
Right.
And British Petroleum is not going down. In fact, it looks good. But what I've found is that if, one can bring all the rest of them down. So that's why I'm saying whether it's a week or 2 weeks, because if you're going for the dividend, I don't see them going up anytime real soon either. Do you know what I'm saying? I think people are buying it for the dividend. But if, in fact, there's going to be more oil disaster, meaning going from 59 back to 50 or something, then I think you'll get some selling pressure there, It may have to do with, too, and I can look at this even the next break, it may have to do with the amount of, I wonder if they do their business in pounds.
Yeah. That's been a game changer. Yeah.
It has. And that, so they could be definitely making more money in that context. In fact, let me just see something here for a second. If I go BP, because I can bring this up in London for a second. Let me just see this, LM. Okay, here it is. BP/LN. Okay, yeah, let's bring this over here. So I have it up in London. Let's see what it looks like in London now. So in London, you're dealing at 442 pence. It pays, look at this. Oh, this is interesting. In London, in pence, it pays a 6.5% dividend.
That's sweet.
Yeah, isn't that, okay, and we put this, I'm going to put this on a 10-year monthly. Same setup. Yeah, it doesn't look to me like it's going to croak.
Okay.
It just
Where
doesn't.
would you put your stop?
I would put it, let me bring it back to the U.S. for right now. I'm going to put this on a monthly, because then you get a much better gauge on it. Okay, so we just tested 39. Now, are you going for the dividend on this?
Yes.
Okay. So, put us back on a weekly. I don't want to give you 5 points down. That doesn't make it. Oh, I see it. Okay, cool. Okay, so this got trashed on the 19th. You know what to do? I'd put it like, if you're watching Tiger TV, what you have is this, folks. On December 19th, on a weekly, we went from $39 to $34.88, and it came off that level. All you really have to do is push it in about $1.50, so that'd be about $38, $37.90, something like that. You don't have to go to the bottom of it, because if it gets in that far, it will go to the bottom of it.
Okay, because I was going by 39, but then when you said you'd buy it there, I was saying, oh, maybe that's stupid.
That's why I didn't do 39. Listen, when I looked at it, it's what that's why I asked you if you're going for the dividend, because it can get down there in a heartbeat. I mean, do you know what I mean? So what I'm doing now is that I'm taking the week of December 19th.
Okay.
And you have the high of that is 39.42, the low is 34.88, and I'm really taking $1.50 off the 39.42. And the reason I'm going like that is that if it gets into it that by $1.50, it will go down to that 34.88. So it's like, why put it down there when it shouldn't get in that far. If it is, then it's going to break down like the rest of them.
Right. Okay.
Yeah. Awesome.
Thanks a lot.
Okay, Marie. Have a great one. Have a safe one. 877-927-6648. Let's go look at the volumes out here right now. Coming into this close, folks. Yeah, they're gonna throw some volume at it again. This is gonna be wild. What do we got? Yeah, they're gonna throw volume at it again. We'll see where this shakes out. Inside the SPY right now, we have 71 million, and that thing is picking up. Inside the Qs, we have 16 million. That's actually higher than yesterday. And see, the Qs, this is what's so wild, folks, okay? The Qs went to a higher high yesterday and then gave it up. See, the Qs yesterday only did 15.8 million. We're already at 16.3. That's an indication that the diamonds are doing 3.1. We did 4.3 yesterday. Those lower swing points are 4.7. We'll see what kind of juice they can get as we move into that close. But if we take a look at and we put those futures up for a second, and it's the futures market, folks. It's in the actual S&P minis that those first hits actually come in. And as we were just talking with Marie here, sure enough, that whoever that operator is just keeps throwing it at it. We just did 28,000 contracts on that last 10 minute. Now, it's going in. We got into that at the 1420 today. It was 39,000 contracts. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow, down 58. NASDAQ's off 9.5. S&Ps are off 5. Gonna be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Ma Bell right now is up 46. You get, Walmart is down 49. We have GM off 46. JP Morgan down 25. 3M is off 157. Let's go over to those financials. The financials have been hanging tough up at these highs. Let's pull that one out there. So we'll start with that XLF. We take a look at the XLF. XLF right now is trading at the 2483 level. Oh, see, this is subtle. Check it out, folks. Oh, this is intense, man. Okay, so the XLF, you talk about an expansion of volume today. This is a big, someone is unloading the XLF. Now, we're only down 14 cents. You have 28 million shares traded, however, and this is after the XLF tried to get over its high of December and couldn't handle it. We got over the high, okay, got up into that level. That was on the 18th. You went up and you tested it 3 days ago. It didn't get to the very top, but it did test it. Pushed into the bottom of it with dramatically lighter volume. And now you're coming off that high with volume. And what you're actually doing on the XLF is that you're breaking the trend that was in place from this 24.34 level. Now, it doesn't seem like a lot, and it's not price-wise. It is, though, in the context of where it's been, because the XLF has been here for so long. And mind you, the XLF has that high volume low in February. That February high volume low was at 22. So that leaves, okay, you know, when we're taking a look at that, that leaves the IBB. The IBB, folks, is the number. If we switch gears on you for a second, I'm going to go over to the transports. The transports are down 70. Now check this out, because the transports are going to be the first major indice, as an indice, to get into this October 2014 level that I've been talking about for quite a bit. Right now, put this on a weekly. This is a heads up extraordinaire, folks. So the transports are off the high of 9,300. You're at 82. We're breaking lower today. We are 81.69. So right now you're 40, 50, you're 70. We're down 72 bucks, and guess what? You're 72 bucks away from the beginning of getting into that level. Now, I will get tomorrow, I won't have the volume on this baby until tomorrow, how we're coming into this, because this very well could be an ABC structure on the way down. This has been building cause for 4 weeks. We went straight sideways for 4 weeks. It's breaking, and it's breaking down today. That's a heads up. You know, those transports, UNP. Let's just see. The airlines have got killed. It's the rails. Interesting. It's the rails. Okay, get the setup straight. Watch this, folks. This is a trip. Okay, we just had Marie, and Marie was calling about British Petroleum, right? We dissected ExxonMobil, Chevron, and then looking at British Petroleum, right? Big dividend-paying stocks. The oil market itself, bottom line, wants to go lower. Now, what you have is that the rails, okay, also want to go lower. What does that set up? What that's setting up, folks, is that shale oil is going to go lower. The rails are basically, the rails are showing the weakness. The oil equities are showing the weakness, and the oil itself is showing the weakness. Wow. Amazing. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow down 66. Nasdaq's off 7. S&Ps are off 5.5. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day, kicking off a great summer. This is a quote by Richard Bach. To bring anything into your life, imagine it's already there. That's so real, folks. I don't know how it works, but I'm telling you, man, you visualize that deal, what you want, somehow it just comes. Pop right into your life. Market-wise, let's take a look at it out here. Dow Industrials down 75, Nasdaq off 10, S&P's off 6.5, gold contract flat at $1,172 an ounce. Silver off 3 cents at $15.81 an ounce. Platinum up 8 at $1,085 an ounce. Copper flat at $2.62 a pound. Light sweet crude down 62 cents, trading at $59.65 a barrel. Bonds, we had the 10-year down 8 ticks, 125.15. 30-year down 18 at 149.09. Now, the 10, the 30, the TLT, all in ABC structures on the way down. They were 2 to 3 points away from finishing them up. Bottom line, folks, if you were shot, I shot those bonds, I'd be covering, or I'd put a stop right next to it right now. The reason being is that the bonds themselves, last week, they had a couple price strength days. The way they backed down today, they backed down with a lot lighter volume, folks, okay? Those bonds want to go topside again. We'll see if I don't suspect they're going to attack the high, but they want to go topside right now. The setup is just there. King dollar down 23 ticks, trading at 95.39. You have the euro flat at 112.03, and the yen is down 24, trading at 123.61. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Well, yesterday, bottom line, you came down, volume expanded. Today, also volume expanded. And what's unusual is that it expanded. It was light volume most of the day. As we were getting into that close, they were throwing some juice at it. The SPY right now is at 209.83. The benchmark is that February 25th high, and inside the cash, and that's the one to keep your eye on, folks, is that's 2119.59. When we had got over that on Tuesday, it couldn't handle it once again. The last time we were over it, we've only been over it 6 times. 5 of them were in May. May 18th over to the 22nd. It stayed over that level, pushed back underneath it again, pushed back underneath with volume. What that sets up, now you're going to go after these swing lows, and we'll see, in fact, if you get an expansion of volume in order to break down those swing lows. That's in all the indices. Well, no, that's in the S&P. We go to the NASDAQ, the NDX 100. NDX 100 has a lot more work to do in order to get back inside the lower range. So the lower range that we're talking about inside the NDX 100, and the NDX did have an expansion of volume today. We're at 110, and to get inside that range, it would be 109.42. That's the number. The small caps. So we take a look at the small caps, what we have with the Russell 2000. Russell 2000 is at 127.85, and the small caps have quite a way to go lower to get inside the lower range. The small caps had broken topside, got away from the price. Small caps went all the way up to 129.29. The benchmark that I'd like to look at on this one is all the way down at 126.31. I'm using, and in all these cases, folks, what I'm doing is this. We've been in consolidation for a long period of time. I'm using the first high in the consolidation as the benchmark. The reason being is that is the first high that was generated. You pull down off that high with lighter volume, with heavy volume. Now, the small caps made two other highs on top of that. But what you like to do is that when you're looking for probabilities, the hardest one to get back inside would be the first one, because it has to break down 2 separate swings in order to get in it. That's why I'm using it, because that would mean that your probability goes higher, that the market actually wants to go lower. Gold contract out here, what we have with gold is this. We need some price spread happening in gold. We have no sellers in the gold market. We have no buyers in the gold market. What gold is doing, and it's contracting dramatically, by the way. You're coming back into the March 18th sign of strength, and you're doing that with dramatically lighter volume. We haven't got to the lowest swing point just from June 5th yet. We're at 1172.50. If we go over, I'll take a look at the TLT and just show you, as I was just talking about that bond market in general, the TLT has come down from 137. We're at 116, so that's a heck of a move down, period. The TLT looks to me that this last low that was established out here on June 10th, it's testing that level. Today we tested that level with 8 million versus 12 million. When I look at the 10-year, the actual futures, the 10-year and the 30, they just look to me like they're just prime to do a decent bounce out here. King dollar. What do we have with King dollar? Bottom line. And here's where there's no doubt there's a little divergence out here. King dollar it had a nice sign of strength. Now, the sign of strength that King Dollar had was really like the sign of strength that the bonds had last week. That being the case, the King Dollar had it on Monday. When King Dollar had got to went from a price point of 94.48 to 94.85. It had a price spread. It had a little juice behind it. Now the difference is that I suspect that King Dollar looks like it's about a week and a half behind the bonds. So King Dollar still wants to go to lower price. What would change that is that if King Dollar turns around and gets another day of strength, next 3 or 4 days, and then backs down into those levels with lighter volume. You get that set up, that's going to be like another change of trend that King Dollar would do some kind of a counter trend bounce. The market itself, well, here, check this out, because this is really, this part here is really cool. Okay, so all the markets, folks, are waiting to see what the heck is going to be going on in Greece, okay? That's what it's coming down to. I suspect they're just going to kick the can down the road. So the cutoff date is next Monday, actually, Monday. They've been claiming they have to get a deal done every day. Bottom line is that this thing is getting so far over the top that there's going to be a deal. I suspect what the deal's going to be, however, is an extension until Labor Day or something. That's how this thing is shaking out. This is Tom O'Brien. This is TFNN. You stay right there, folks. We come right back. Dow down 75, Nasdaq off 10, S&P's off 6. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Nike just come out with numbers. Let's take a look at these numbers. It's pretty amazing too. So Nike closed at 105.50, folks. It's trading up 3 points, but for the amount of beat that it did, it's like, man, it seems like it should be up more. But anyway, this is how the numbers come down. The estimate was 83 cents. They made 98 cents. Their future orders, the estimate was 10.4%, and they're up 13%. Bottom line is that the gross estimate was 7.69, and they took in 7.78 billion. Bottom line is that you're at the 108.05 level, which is going to get it over the highs, but it just seems. A beat like that is one monster beat. There's no two ways about it. Lots of clothes and lots of athletic gear are going out the door. No two ways about that. We go over and we take a look at the. Here we go. Okay, so here we're going to get into the European markets, and this is why. So we got Greece happening. They're going to try to figure out how they can get the banks paid and the IMF paid by Monday. That's the challenge right now. And what they have to do in order to get them paid, folks, is that they have to lend them more money. So check this out. I mean, this is the way it works. The banks are going to lend them more money just to give them their interest rate back. That's what's going on here. That being said, take a look at the UK. UK was down 36 out here today. No big deal. Bottom line, though, it is a deal in the context that all the UK did yesterday when it tried to get higher. It got up to the 68.73. That's ice. So technically, it's like, okay, you want to come back down and test the bottom. The bottom of the range, not that far down. It's only 66.25, but that's $200 down. The DAX in Germany is really important. Why? Because it's the German banks that are on the hook in a big way. The DAX in Germany traded sideways out here today. DAX in Germany also is right at the. Yes. Oh, look at it's going into the first downdraft. The first downdraft from April 17th. That level is 11,674. And we're at 473. Yeah, the DAX wants to get into this. Looks like the DAX wants to get out at about 10,700. So I suspect tonight at about 0300 hours, you're gonna see some real action out here. If we go over to the euro, we take a look at the euro in general. Euro right now, so she's back down. Yeah, the euro is in a consolidation. So the top of the consolidation is 111.67. Rather 114. So it's 114. The bottom. It looks like it wants to reject where it had a sign of strength on June 2nd. That's the way that is set up right now. We go take a look at the oil market. We were bisecting and dissecting the oil market, folks, in the last hour, and this is really cool. And I'll just do this quickly for you. The oil market. The way that the oil market is set up right now, this baby wants to pull back big. And let me show you. Watch this. This is really, I love it when you can go through a couple different indices, and the indices actually in harmony of what the prospect would be, whether it wants to go up or down. And what we have with oil is this. Oil's trading at 59.65. Now, the way this is set up technically, it's like, okay, it wants to go back a couple of dollars, nothing heavy, meaning 56.88, something like that, because that's the consolidation. Can it go down lower? It may, but I'm just suggesting right now it's going to go in the bottom of the consolidation. That being said, now watch this. We go over to the XLE. The XLE, folks, is breaking swing lows, and what we've done inside the XLE out here is as we're getting into that swing low. Today was down 77 cents. We're at 75.84. We broke the 87. Now, we broke that with lighter volume, but that's going to go. The XLE does have a high volume swing low at $71.70. So that wants to get down to that level. So, picture, you get the large integrated oils that want to go lower. You get oil that wants to go lower. But this is the kicker, folks. If we go over, I'm going to put up the transports. The transports now are only, let's see how many more points they went down from. They were only 72 points away from the October of 2014 swing area. That swing area is 169, and right now 8,169. Right now we're at 8,239. So we got what? That's 41. We got 80 points. We're 80 points away from it. And what the transports did today is that the transports broke a swing point that has been building cause to break for 4 weeks. So we broke that area. We'll get the volume on that tomorrow. If that broke that with volume, that's going to be in big trouble, because that would say it goes to the bottom of that area. And check it out. What inside the transports is the weakest? It's the rails, folks. So when I'm looking at the rails, if we pull up UNP, what you're going to see, UNP broke $1.28. This is an equity that's down from 123 to 96. You broke with volume yesterday. There you got an ABC down. What that says to me is that oil's going lower. The large integrated oil companies are going lower. But the biggest clue really has to do with these rails, and it has to do with the rails. Why? Because the rails, folks, have been making a fortune on bringing the shale oil out of the Midwest and bringing sand into the Midwest. But it's both. So when I look at that, it says that, you know what? That is the writing on the wall. Because what we did, if we look at the, let's go take a look at some of the airlines out here today. If you take the airlines have got killed, by the way, too. But UAL was up slightly. Delta was up slightly. It's the rails that are inside that transports that basically are saying flat out that oil wants to go lower. Now, the other heads up inside all of this has to do with the aspect of that October 2014 swing area. If you want to see another one that is going after it right now, pretty amazing, is Hertz. We take a look at HTZ. What you're going to see with Hertz actually went after it today, I believe. Hertz actually got into it, went after it. Hertz broke some swing areas today. We're at $19.13. Put this on a monthly. And what you're going to see, oh man, you talk about monster volume. So Hertz today did 16 million shares, broke a beat. That broke everything, man. Holy cow. Okay, so your low on the October 14th level is $18.50. We hit $18.89. You closed out at $19.13. Hertz is going to be the next one going down there. The biggest deal out of all of that, though, folks, is that transportation index is 80 points away from it. It's going to get into it. Well, guess what? All these indices are getting into it. And we'll talk about where that number is with the S&P, but the number on the S&P, folks, it's way down there. The S&P is really high compared to where the October 14th swing is. You stay right there. We'll come right back.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We go over to the IBB. Now, the IBB, folks, the NASDAQ Biotech Index has not broken down. The IBB is still above its last swing high, and the NASDAQ Composite, folks, is all about the IBB. So I suspect what we're going to see until the IBB came down $1.75 today. And by the way, what it did is actually come down on light volume. So the IBB doesn't want to give it up yet. You know, when we had gone up, it wanted to test this high, which it did. They had that spike high at March 20th. That was 374.97. It got over it. It's hanging over it and is backing down with lighter volume. So what that says is that somehow, some way, that thing is going to try to get up into the highs again and test once again. Gilead, which is the high flyer inside the largest weighting structure. Now that pulled back $1.78 today, also light volume. Amgen, Biogen. Actually, let me take a look at Biogen. Amgen was pulling back today. Biogen. Yeah, Biogen is pulling back too. What's intriguing is that Amgen and Biogen, now those are large weighting structures inside that NASDAQ Biotech Index, but bottom line is that they just have pulled back, but because Gilead and a few of the others had so much strength, that Biotech Index has stayed higher. If you have been trading the Direction shares, Direction just came out with two new triples, right on time, too. If you're a bull inside the biotech, you can get out there and the symbols, let me just get you the symbols. LABU. LABU, folks. LABU is the bull share. Okay, it's the biotech bull. That's 3 times the correlation each and every day. And remember, these things are priced daily. They're daily investment vehicles. They compound on the way up and they get defensive on the way down. LABD is the bearish symbol. both of them, I believe, let me see, when they just established these, too. These were established, one sec, let me see if I get this. Okay, May 28th. You know, so they've been on 6 weeks right now. What they've also done is this. This is pretty cool too, folks. Okay, if you're over in China, because you know the China A shares, if you take a look at the CHAU, what that is, that's the 200% exchange traded fund, and this fund's daily investment results is 200% of the CSI 300 index. This one here was established. When was this established? This is early. This hasn't been around too long either. And this is a liquid. This is liquid also. Yeah, this was established on May 26th. I expect in both cases, those are going to be dynamite trading vehicles, but particularly because you have the Nasdaq biotech that's up at the highs. Bottom line, plenty of people think it's going to go higher. Plenty of people think that thing wants to go south. One of the Tigers are asking, what if there's no deal on rescuing Greece by June 30th deadline? The bottom line, folks, is that there's going to be a deal. This is the it's amazing with all the news that goes out on a continual basis, okay, on the debt structure. When you cut to the chase, this is how the chase. This is my take of how the chase goes. When they made the European Union, one of the biggest things they did inside that union was that once you're in, you can't get out. Okay, that's what they signed. Okay, and one of the main reasons that the European Union in general, was strong, was because of that aspect. Because let's say, picture, just like the United States. When you're dealing with the United States, you're dealing with the United States. You're not dealing with all the states that are involved. In Europe, what was happening is that people were dealing with rules in all different countries. So when they got the European Union together, it was basically just picture it as a United States, except that it's a bunch of countries that decided for some reason to give up their sovereignty, which they're out of their mind, okay? But the bottom line is that they did it. So when I look at the European Union, the bigger issue always is that, and by the way, just like we were talking with Andy Heck, they let Greece in. They knew Greece didn't have the money to get in. They let him in anyway. Then it came out 3 or 4 years later that, oh yeah, they were cooking their books and they didn't have the money. So they knew that, but they wanted him in there. Now the question is, they claim that, okay, we're going to make this deal, or, we're going to basically kick you out, or we're going to do it. They're not going to do it. They're not going to do it because if they do it, they know that 2 or 3 other countries may go out. But the bigger issue is everyone else is dealing with them. And as they're dealing with them, they're figuring it, okay, what happens law-wise if I'm dealing with them? Then all of a sudden they break away and do something else. So when I look at that whole aspect, they're going to kick the can down the road. That's the bottom line. So we're going to know soon enough. And what's going to be intriguing is the aspect of, do we go into the weekend? Do we not go into the weekend? Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
Hey, Tom, how are you?
Doing great, man. You having a good day out there?
I am, thank you. How about you?
Yes, sir. It's a beautiful day in the neighborhood.
Yes, it is.
Okay,
I was calling about the potash stocks. I actually got kind of lucky. I wasn't expecting the move in potash that I had today, but I bought that yesterday, some calls on it. And I've been I've actually traded Mosaic a couple times. I'm long that as well with some calls, and they're both August.
Look at this. Okay, so this is pretty cool. So you get potash. The low for the year is 30. The high is 38. Now this is up $1.45 today, folks, with monster volume. So what happened with these things? Why are they up so much?
There must have been some kind of news that came out, kind of during the trading day. It was like intraday it happened.
Okay, I see. K&S said likely to reject Potash Corporation takeover. I see. Potash may target K&S for takeover. Someone was reporting. Okay, so let's take a look at this on a longer-term basis. So we're trading out at 31.89. This little baby, let's bring it back. See where we're at. No, it's the classic, really. Interesting. Okay, so let's bring this back. We'll put this on a monthly. And what you're going to see is that, it never made it back to its 2007 highs. That's for sure. That's $80. The counter trend pounds took it to 63. Yeah, it rejected. What it did is this, this thing can run into, $38. It rejected the low out here and says, okay, they can run into $38. Well, what's going to be interesting here, which is pretty cool, actually, is that this is where the correlation goes. That would be also saying that, guess what? The commodities want to run, and that's telling me that the dollar wants to go lower, too. You get some action.
Mind taking a look? You mind taking a look at the mosaic?
Stay right there. I'll be right back.
Okay, thanks.
You stay right there, folks. So we got Brent from Martinez, California. We want to hear from you. 877-927-6648.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We had the Dow Industrials finished down 75. NASDAQ was off 10. S&Ps are off 6. We're talking with Brent from Martinez. We're talking about the potash stocks, folks. And what was the other one you had? Mosaic?
Yeah, MOS.
Yep. Let's take a look at Mosaic. So Mosaic, MOS. This is trading out at 46.21. The low for the year is 40. The high is 53. Okay, so they all had a sign of strength. Oh, this gets interesting. Okay, so when we take a look at this one, if we start with this one, what you can see, Yeah, I mean, it wants to probably make the run to the swing point there of the 47.68. I can see this thing actually. This is a classic, man. So check this out, folks. I love it when it does this. So watch this. We made a bottom out here at 43. Now, one of the main reasons you don't have to chase stocks, folks, okay, if you just have a little patience, what you're going to see here is this. It came off the bottom with a nice sign of strength. Now, the sign of strength that came off the bottom, the stock's only trading at 44 to 44.50. It goes all the way up to 47. Then what it does, it comes all the way back with dramatically lighter volume. Isn't that crazy how that works, man? Blows my mind when it does the whole deal. But that's what it did. It came back in, it tested, and we come back in. Okay, so then the stock goes from 47.68 down to 43. It does it with 2.2 million shares versus 9 million. And then today we did 7 million. Yeah, you get action. And I guess IPI is another one, right? That little baby. What is that? This one here went from 11 to 12.16. That also had some nice juice underneath it. That's Intrepid. The low for the year is 10, the high 16. Yeah, and that also not only had a perfect test of its low with lighter volume, then it takes off with volume. Now, yeah, this sector is going to be pretty cool. In fact, this one here is they're probably all like this. I just happened to bring this one back a little bit further. If we take a look at IPI, what you're going to see, folks, is, what is that, 2013? Let me pull this back. If I put this on a weekly, what you're going to see is that this is a classic test of lower price on dramatically lighter volume, and there it is, man, sick. So when this equity got killed in 2013, it went from $19.50 to $12 in a week. Hit a low out here of 10.60. You went into that, tested with dramatically lighter volume. Now you're getting off it. You know what's really cool here, Brent, too, is that this one here, but it's an indication for the other ones, absolutely broke its downtrend. You know, now that downtrend is only saying you can go to 14, but that's not bad for, you know, a stock that was $11 today.
There's a lot of buying in those today. It's interesting.
Well, and you know, one of the tigers are just saying in the den too. Let me bring this up, that all the grains are up big. So this is a good indication that, you know, these commodities are going to move. Let me bring this up. So beans are up 2.2%. Corn was up 3%. Yeah, wheat was up 3%. Let me just look at this for a second, because what you have, folks, is that, yeah, they're all coming off the bottom. This is going to be cool, man. You know what's so cool to be cool about this? Just, I said a little bit earlier, it's going to be cool watching the dollar and watching the metals, folks. You know, this is when you want to put a couple different sectors together, and yeah, these commodities are off the bottom. Well, these grains are off the bottom, man. These are nice setups, man.
Yeah, it's looking like it. All right, Tom, I was going to tell you real quick, I've talked in the past about my oldest son, Shane. He's the one that was living in Morocco and
yes,
Arabic and everything. Yeah, he's over in Iceland right now. He ended up getting kind of his dream job. He's a adventure guide. They do all kinds of multi-sport trips.
Really?
It can be, biking, hiking, you know, rafting, all kinds of different stuff. But that's where he's at right now, is Iceland, which is pretty
How cool is that?
Yeah, pretty awesome.
Oh, man, that's living. That's having fun, making money, and being out there. You know what's so cool, too, is that I think when you go, you know, it's fabulous you can even go that far. But when you almost go anywhere, and it's just a little bit different, everything changes. Then you come back and you can change your habits, which are really cool. Do you know what I'm saying? Because you don't know what you don't know. The only way, you know, we know anything is that you got to get out of your little box, right?
Yeah, that's right. Get out of the bubble. So
yeah,
he's having a good time. He's been all over the place. I mean, he's traveled way more than I have, and he really enjoys it. He loves, you know, everybody, really. He really likes people. He's, got great social skills.
How old is he?
He's 20, just turned 24.
That's awesome, man. That's huge. That's quite a feet for just turning 24, man. Congratulations.
He's all over the darn place.
Yeah.
I'm lucky. Both my boys my youngest son's a good, they're not kids anymore. They're adults. But
how old's the youngest?
He just turned 21, so he's a great kid too. He's a really good athlete, and just all together, just both solid kids. And
he's going to be on the road too, man.
Yeah, he's kind of following his brother's footsteps to a certain extent.
That's awesome, man. Welcome.
All right, thank you very much, Tom. I appreciate your help, and it's great talking with you, and you just have a great day, okay?
You too, man. Congratulations. Really great.
Take care.
The getting out of the box deal is a huge deal, folks. Yesterday I was working up in Boston, right? And in the office, like we crank it out. I do a couple newsletters, you get the show, all that. So it's always busy. And what was so cool, and this always happens, when you get like 4 or 5, I get 4 or 5 or 6 hours that, you're just not really, you're just grooving, like during the daytime. I'm not talking about not. It's really different. And it's amazing to me how your head can change so much. I mean, your head stays the same, but it changes. And, when I was flying back this morning, it feels great. And it's just really funny. And it just has to do with just that little break that you're sitting on the plane and things are different. It's not the exact same thing. And then you get, I get a million more ideas that I want to do. But it's fun. That's the bottom line. It's fun. Let's go take a look at Micron Tech. So Micron Tech, they were just coming out with numbers. This thing is getting smoked. So Micron Tech closed at $24.02. It's trading at 22 right now. Yeah, I believe this is going to break lows. We pull this back, and let's see where this wants to go. Okay, so this thing is going, man, this has got $18 wrapped around it. Let's see what they say fundamentally. So fundamentally, this is what they have. Their revenue was, the estimate was $3.9 billion. They took in 3.85. Not that bad, really. But this is where the market is, I'm sure, not digging it. They had a 10% decline in DRAM average selling prices. They missed by 3 pennies. They missed by 3 pennies, and they're taking them down 10%. That, folks, is a market that wants to pull back. This is Tom O'Brien. This is TFNN. You stay right there, folks. Be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And you can expect, number one, in Europe tomorrow, I suspect we're going to have a little pushing to the downside because, we're dealing, bottom line is that, we're dealing with Friday. And what you're going to hear them claim is that they have to get it done by next week. Sunday night, folks, what we'll end up doing is that they'll end up pushing the deadline further out. That's what it seems. So we'll see where that whole thing does shake out, but that's the way it seems to be shaking out at this particular point. Coming into our market tomorrow, Micron is going to get sliced and diced. That they're taking that apart for literally 3 cents under the market. But the way that's set up right now, that they made a high out here of that 36. It was a straight line move up, and now you get a straight line move all the way down. Nike, if we take a look at Nike, what's surprising with Nike is that it's not up and over these highs in a huge way. The numbers on Nike, folks, were huge. I mean, bottom line, they beat by a huge amount. And Nike closed at the 105, I believe. Let's take a look at this. So Nike closed at 105.22, and it's trading 107.77. Which is not a big deal because it already had given back $1 today. And when you do percentage-wise, Nike had two different things. Nike, the estimate was 83 cents. They came in with 98. And then the average of the new orders coming out, that was 10%, and it's at 13%. It's like, oh, my God. And its gross revenue numbers were up also. So Nike's just a mind blower about the amount of bread, number one, that it takes in, and their growth is like amazing because you're talking about a $30 billion gross deal. Nike takes in $7.5 billion a quarter, and they're growing that at a clip of, what was that? 13%. That's unbelievable. There's no two ways about it. That's a huge number. The financials out here, let's go to JP Morgan Chase, because what the financials did do, the XLF, the financials have given it up at the top. JP Morgan pulled back slightly today, no big deal. If we get an expansion of volume tomorrow, though, then it's going to be a different number, because JP Morgan's at 68. Looks to me like it wants to 68. Yeah, 68 wants to run down to 64. If we can look at Goldman Sachs is trading out here right now at 212.82, and Goldman. Now this is a heads up, because folks, Goldman did come off the high yesterday with volume. Okay, hey, let's check this out. This is intense. You know why? When you come off a high with volume, it's a big number. Goldman had made a high on Tuesday. That high was 218. Volume out there was 2.7 million. You come off the high with 3.9. You fall through today at 2.4. Goldman's on its way into 202, and right now we're 212. If we go over to Berkshire Hathaway, look at Berkshire. Berkshire, it wants to do an ABC structure on the way down. Now, this is going to be intense looking at Berkshire. See how this shakes out. And what Berkshire is going to, what this has to do with, no doubt, it has to do with the amount of rails that probably he owns too. So Berkshire is off the high of 152. This is the B shares. You're at 139. We'll get down 64 today, but this baby's going to go after that B point. And we'll see whether we get an ABC structure on the way down. The B point we're talking is 139.14. And bottom line, we're going to know soon enough. And you can expect out here tomorrow, folks, high volatility. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.